Good day, everyone. Welcome to the Daily Ward. And the word of the day is Fed, as in the Federal Reserve Bank of the United States. Now, I spoke about this yesterday and really long, I guess it was 35 minutes. It only felt like a 20-minute video. I got a little nerdy, a little far into the depths of the weeds of this whole conversation about the Federal Reserve and Trump, and then I went into Basel Accords 1, 2, and 3, what it meant. Basically, I went on for a really long time and explained my stance on the Federal Reserve System, which is basically a system that controls the price stability in the market, and it has a mandate of maximum employment. So it does this by controlling interest rates in the economy. Now, without getting into a full professor mode discussion, I don't think the President of the United States necessarily likes the Fed, and I don't think he regrets his choice in the Federal Reserve President, the Federal Reserve Chairman. So he's been sending out a lot of tweets, a lot of hate to the directed at Federal Reserve Chairman Powell, Jerome Powell, and who he appointed, by the way. But it's interesting to watch, and then watch markets react over little Trump tweets every now and then. So if you missed my daily ward yesterday, go check it out. I didn't get too Khan Academy on everyone. I hope not. That's not the goal of this show. The goal of this show is to get you thinking about some of the hard to answer challenges that we have as a society. So one of those challenges is the economics of the world, basically. It's a world global financial system that we live in, not a US-based system anymore. Now, because a lot of people think that our financial or our economic system stops at the Fed and our bank, and it's like an internal system. But there's another layer to it. It's the Bureau of International Settlements that's has central banks as members, and they have Basel Accords that are basically regulation on central banks. Central banks then in turn change what they do. Mostly the reserve requirements they are required to hold in a case of a global financial recession. So check out yesterday's show where I get into depth about that a little bit. But I wanted to speak about this Trump tweet that I don't think I have the full Trump tweet, but I have a little bit of it because it's cut off there at the end. The Federal Reserve cannot mentally keep up with the competition other countries. At the G7 conference in France, all the other leaders were giddy about how low their interest rates cost have gone. Germany is actually getting paid to borrow funds, I guess. Is that, I can't remember because I retweeted and commented. This was early this morning, right away. Essentially, I was getting ready for work, but I said, and if you watched the video yesterday, you would know this: black hole economics is not the answer. Dismantle the Fed, leave the BIS, stop fractional lending, reframe the banking system, trickle in money supply, curb inflation with less regulations for small business, set bilateral agreements with trade partners, remain energy independent. That was my overall solution to the Federal Reserve issue that we have. Now, I'm not totally against central banking necessarily. I'm just against having an outside entity of the federal government, which is a Federal Reserve banking system, control monetary supply within the system. Now, there's better ways of doing it than just relying on a board of governors that I believe it's 6 of the 9 board members on the Open Market Committee, Federal Open Market Committee, which conducts open market operations And it's important that everyone knows how the Fed works. So please read the St. Louis Fed. I believe it's the St. Louis Fed. I have the website right here. Goes into depth, elementary level, I would say, on what the Fed actually does. And you can read all about it. It's quite interesting how the Fed controls price stability in the economy. But the open market operations of the Fed helps target a discount rate, which is the rate that banks lend each other on loans overnight. This either sequesters the money supply within the system, and more importantly, availability of credit, or it loosens it by having rates that are lower. It loosens the flow of credit and the ease of borrowing into the system. Like if you're going to get a really good interest rate, it's because it's low, right? You don't want to pay more than you have to. So you have easily availability to credit. Now, on the other side of things, in a contractionary market where the Fed wants to curb inflation, right, they ramp up their federal funds target. And it's important to know that they don't just magically click a lever and then all of a sudden interest rates are changed. The Federal Reserve has to actually do something. So when they lowered their rates in July 31st by 25 basis points, the target rate, that's the target rate that they're targeting interest rates to be at. So, which is the discount rate or federal's funds rate. So in an expansionary, so that's actually expansionary. When the Fed lowers rates, they want the economy to expand. And they did that basically this time around because of geopolitical concerns. That was the answer they gave us. Even though unemployment was steady, a high unemployment rate, or a low unemployment rate, and employment was high, and inflation was moderate. It was floating around 2%. It's been floating around 2%. And it hasn't been higher than that, and by a couple of basis points here or there in a long time. So, to have an expansionary monetary policy, the Federal Reserve, through open market operations, buys securities from securities dealers on the bond market. Those are mostly bond dealers are banks that have access, or they have a plethora of treasuries. It's the treasury market is essentially what it is, and government treasuries, to be exact. It deposits payment into bank accounts of those dealers or banks and businesses and individuals who sold the securities. So if you want to get in business with the Federal Reserve, become a bond dealer. You probably need a couple $1 million to do that, but it's almost a guaranteed way to make money. Those deposits become part of the Fed's commercial banks hold at the Federal Reserve, and part of the funds commercial banks have available to lend. Because banks want to lend money to attract borrowers, they decrease rates, including the rate banks charge each other for overnight loans. That's the federal funds rate. Now that's a mouthful, and without this getting into a real deep lesson on monetary policy, if you want to know more about it, just go. I'm literally reading from the St. Louis Fed's website, stlouisfed.org, and you can read all about the Fed and what they do and how they do it. My full stance on this is the president doesn't necessarily like the fact that an outside influence from the federal government has the ability to change the effects of the economy. Now, because people vote based on the economy. They don't necessarily vote based on, character or prior experience. What was George W. Bush's prior experience? Obama's prior experience? At least Donald Trump was a businessman, and he's running the government kind of like a business. And what's outside of the business is the control of money in the system. So he's, giving the Fed a lot of shit with his tweets, essentially. And we'll see how the Fed reacts. But it's important to know that the Federal Reserve controls the flow of credit into the system, and that's how money is actually created. People think the Treasury just prints money, or the Fed just gets the Treasury to print money for them. Now they erase money all the time, and that's a topic for another day. Basically, just go take a money and banking class if you really want to get into the nerdy specifics about this. But what does all this mean? Why am I saying and explaining, expansionary monetary policy? Because when these decisions are in the hands of few men and they make the wrong decision, you can have hyperinflation. This happened in the 70s with the Carter administration, and before Paul Volcker. I don't even think anybody remembers the federal chairman's name, who caused interest rates to spike out the roof and or prices to spike out the roof, and Paul Volcker had to come in and raise interest rates ridiculously. Anyway, that's history. Long story short is it can lead to a really bad decision. Now, people think that Obama had a lot to do with the economic expansion in the United States, and I can tell you for certain he had nothing to do with it. Basically zero. He did not stimulate the economy in any way. Massive spending, no tax cuts, zero fiscal policy, cash for clunkers, really. The Obama phone didn't even work. Obamacare, or the American, Affordable Care Act didn't work. Still doesn't work. So, you can't give Obama credit for nothing, because what happened was the Fed went into extreme expansionary monetary policy. We went from 5.25% rate to 0. And the reason why President Trump is giving hell to Jerome Powell, Fed Chair Powell, is because the Federal Reserve has increased rates eight times while he's been president. From 0.25%, from 25 basis points to 2.25%, 250. So there's a range that the Federal Reserve actually targets. So now it's 2%, 2.25% after the last interest rate hike. And we're the only country in the world basically that has a first world country that has interest rates that high. It makes the dollar really strong. It makes exports from the United States expensive to buy. So people are exporting, businesses and companies and corporations export less because nobody wants to pay the highest price that they're going to get for something. Right? You're not going to pay something coming from America that's cost the American dollar when you can get the same thing from, Taiwan and pay the yuan. I actually don't even know what the currency is, and I'm guessing that it's the yen or the yuan in Taiwan. So basically what I'm saying is this, to wrap up this whole thing and keep this episode a little bit short. The Federal Reserve Bank works. It's a system. It's been in place since 1913. It benefits some people. If you're playing the market, you can kind of, catch these expansionary and deflationary periods with, which is the business cycle. You can catch the business cycle with a, portfolio and a plan and make money, make a bunch of money. If you know how to do that, most people don't know how to do that. That's why they go to a financial professional to do it, which I highly recommend you don't do that. You learn as much as you can on your own, and if you don't have time to figure out how to invest properly, then go see a financial professional. Anyway, I'm for abolishing the Federal Reserve. I'm going to say that right now. And keep it a central bank of the United States, but don't have the Federal Reserve banking system with its fractional lending practices. Because it literally has 90% of the actual money within the system is actually borrowed terms. It's credit on the market. 10% is actually the money supply. Now, money gets created through paying back loans, especially through the banking system. Price increases And arbitrage is another way that money is created within the system. That's how real estate entrepreneurs make money, on arbitrage, especially if they're holding real estate for a long time. Actually, any trader that holds a commodity, real estate's just a commodity, over a long time, sees pricing differences in the market over a period of time, and that pricing difference is inflation if it's going up. It's also important to know what deflation and disinflation is. Disinflation is when inflation goes down. Deflation is actually economic contraction, and it's really bad for the system, but that's like a recession. So the way to really do this, and economists have been arguing this for a century, and nobody seems to have the right answer to come out with specific policy. But where we're at in the United States right now is we have monetary policy that works. It's kind of really the only thing that actually works. And fiscal policy, which the government's out of control with its spending. We have a 106% debt to GDP ratio. So, we're living outside of our means in the United States, which, isn't necessarily a completely bad thing because we're a consumer economy. Now, there's a study I'm going to cover, I think, tomorrow about consumerism in the United States, but for now, what I want to say is to finish today, because I've gone on too long about this, and you've probably checked out already because talking about economics isn't that exciting. I get it. But this is important to know. This is important things to know, especially when I'm talking about abolishing the Fed and the Federal Reserve banking system. Because we need a central bank. Other countries, all the other countries in the world, they have a central bank. And the president is wrong about black hole economics. He wants interest rates to be zero because they were zero for Obama. Obama had it really easy. The economy was really strong because it's coming back from a huge hit, the great financial crisis. So, and we printed money through quantitative easing. I'm just saying we printed money because it's an easy way for people to understand. It's not actually what really happened, but we influenced money into the system at a great, expense. To really the American taxpayer who helped, fund these bailout situations. But that's besides the point. The point I'm trying to make is having a central bank control the monetary policy and price stability in the country is a lot better. But who does it? Is it the executive branch? Is it Congress? The Democrats want Congress to do it? Doesn't sound like a good idea. Congress can't agree on anything. It's more polarized than ever. Fiscal policy only works to a certain extent because we're really just talking about government spending and taxes when we're talking about fiscal policy. The reason monetary policy works is because we balance the price stability. We balance inflation through creation of, credit, basically, and that credit creates money in the banking system. So, but we don't need to have a privately held banking institution run that decision for us. We could do it all on our own, and you wouldn't necessarily have a dollar that said, backed by the Federal Reserve, or this is a Federal Reserve bank note on it. This is a fiat currency system anyway. Why don't we just trickle in the money supply at an even clip? If pricing gets out of control, gets out of control, you turn off the trickle. Right? You turn off the access to money. And then naturally, I said that backwards. If prices gets out of control, you turn the knob up a little bit. If, to stifle back the inflation, right? Because then they'll be flooding more money into the system so you can afford to pay for it. But it's very tricky because you don't want to have, this could also lead to hyperinflation, so it has to be a trickle. It cannot be turn the faucet on, turn it off, which is what we see in China. And even they have a 2% threshold. But 2% a day is high. That's super high. There's 255 trading days a year. I mean, they could do that for, they can ramp it up really quickly if they really wanted to. So, I'm going to get into this topic in a couple of weeks on the Ward Room Live. If you've made it this far, thank you, into this episode of the Daily Ward, because it is something that's hard to really come up with a solution. And I kind of just gave a hint at what could be a viable solution. I'm sure there's a lot of economists that would think that's a dumb idea. Milton Friedman didn't seem to think so. And he's probably the most well-known economist of the 20th century. So I'm going to come back to this conversation. I might speak about a little bit about it tomorrow just because I know a lot about this. This is my topic of discussion that I cover a lot of because I can think about it off the top of my head. But the Ward Room Live we're not just economics and finance. As a matter of fact, in 2 weeks, we're doing a show on the future of media. So you're going to want to tune in for that. That's 2 Sundays from now. The Ward Room Live. It comes on at 9 a.m. Pacific, noon Eastern Standard Time on Sundays. It's a Sunday morning live talk show with me and my co-host, Mr. Mike. Down in the replay of this show is there'll be a description. Obviously, it's in the show notes. There'll be a list of where you can find me on social media. There'll be a Patreon account there. There's to help support the show. I'm going to start pushing that a lot, probably at the beginning of the shows. And then you can find me in the other social media outlets in there. So, with all that being said, thank you for sticking around while I got nerdy about the Federal Reserve Bank. And look, do your own research. This isn't rocket science. If you don't understand the financial system, you should probably look into it because you're a part of it. You're a part of it. You were born into it. You didn't ask to be a part of it. You didn't really necessarily, agree to it. It's what exists. So it behooves of you to go and do your research and understand how this whole system works. Not only in the banking and economic side of things, healthcare, education, right? Medical system. All these things you're a part of if you live in this United States. So, I challenge you to go do that. To read as much as you can. To absorb as much knowledge as you can. United States is an amazing place to live. We have the power of choice. We have the ability to choose through somewhat of a free market, right? And we're going to talk about healthcare later this month too. Future of health and healthcare specifically. And we're going to we're not going to dive deep hard into just being pundits and going through data. I'm not a reporter. The Daily Ward is an opinion piece. The Ward Room Live is a talk show and a debate where my co-host takes the other side of the coin most all the time. And there's Q&A. There's live Q&A. It's a live show for a reason. So with all that being said, I'm signing off for now. This has been the Daily Ward. Thank you for joining me. I'll see y'all next time.